Hello, everybody. Tim Knight here. Welcome to a new week. And we're going to do a very unusual show today. Usually, I gather up a bunch of equity related charts, ETFs, stocks, maybe an economic indicator or two, and try to put those together in some kind of narrative for the day. And I've done thousands and thousands of these shows because I've been around from the very beginning. But today we're going to do something unusual, which is focus on precious metals. This is an asset class that I'm very fond of. I've acquired them for years, and it's pretty much the only asset I cheer when it goes up. That and real estate. So, yeah, we're going to focus on precious metals today. I'll just spend a moment with equities since we might as well just touch base on that. It's another green day. It's another day of lifetime highs. ES is up about 50 points. NQ's up hundreds of points. Everything's green, green, green. Mercifully, my shorts aren't. I've got 15 different bearish positions. 13 are red. God bless you guys. 2 of them are up about 1%. That's all right. I actually love when that happens. I love when the market keeps muscling higher and my shorts just make the most obscene gesture and keep falling. So that's really cool. But we're not here to talk about that except for a couple of quick symbols here. First of all, as always, we begin with a spider. This cracked resistance here went up, eased back, tested resistance successfully, and then woo, up it goes. So this is the fifth big old green bar in a row. There you have it. Lifetime highs every day. Mercifully, China is not, and I've got some exposure to China. There was a lot of chatter last week about all the big press conferences and announcements that the Ministry of Finance would be doing to show their support, manipulation, and insertion of themselves into Chinese equities and the economy. And they did all that, and the market shrugged its shoulders, yawned, and left the room. So FXI is down about 1 2/3% right now. PDD, which is my favorite Chinese holding, is down almost 6% today. I've got puts on that. So that's cool stuff. So yeah, China did not, I mean, the US markets didn't care. They're still flying. But yeah, China did not do whatever magic intended to do. That thus ends the equity portion of our program. We're going to talk about precious metals now. And these are going to be very unusual symbols, not the stuff you're accustomed to seeing. We start off with something basic, gold. This is the symbol /GC. This is the continuous adjusted contract for gold, going back for a quarter of a century. This is all the data I've got. I wish it went back to the 70s, but I don't have that. And this is in 3 broad phases. Phase 1 is from 2000 to about 2011, when this was kind of the NVIDIA of its day. It did nothing but go up. Amazingly, gold was only about $260 an ounce back in the days of Bill Clinton, which not coincidentally, the year 2000 was peak prosperity, peak power, peak everything. That's when America was really great, to use the term everybody's using these days. We've been on the decline ever since, although it's hard to see. But 2000 was the apex of American stature. And weirdly, gold was cheap back then. And it's been going up ever since. And it's not that weird that gold would go up and up and up while America was sort of declining. Then we went into this long basing period because from 2011 all the way till 2023, 12 years, nominally gold didn't do anything. And take inflation into account, gold actually went down. So you put a bunch of money in gold in 2011, a dozen years later, well, it's worth even less than it was 12 years ago, and gee, why didn't I buy anything else? Now we can see that there was this beautiful consolidation going on with this tremendous cup with handle, and it cut above the psychologically important $2,000 level right around along here earlier this year, about half a year ago, and it's been doing great ever since. You can see just zippity, zip, zip, zip. So up it goes. So gold, beautiful long-term pattern, has been doing very, very well. Silver is a bit messier. Now, this chart goes back a lot farther. The equivalent time span for silver is like so, what we were just looking at, 2000 to present. Unlike gold, silver is well below its own lifetime highs. Those highs were achieved back in 2011. But we still have kind of the cup with handle going on here. It's not kind of, it's actually quite good. There's the cup with handle, and we're starting to cut above that. And if we look at the broader history, all the way back to the Hunt brothers, incredible, I wrote about this in one of my books, the incredible Hunt brothers cornering, or attempt to corner the silver market, that was that. And there was a demolition of silver afterwards, and it bottomed back in 93, and up it goes, and down it goes, and up it goes again. These are just raw nominal prices. How many US dollars in the present dollars did it cost to get these things? But there's better ways of looking at it than this. There's a general theme, though, that I want to get across first before we get into that, which has to do with ratios of equities to precious metals. And my postulate here is that equities are very overvalued and precious metals are undervalued, and that will resolve. The ratio charts that I look at tell me one of three possibilities. Either one, equities are going to go down a lot. Two, precious metals are going to go up a lot. Or three, both. You can't really know which of those three, just some combination thereof. And so here's a quintet of charts that all have the same conclusion. This one is the All World Index divided by gold. We've looked at this from time to time, and this illustrates nicely how back in 1999, 2000, this was at its peak equity value in terms of real money. When I speak of real money, I'm talking about gold and to a lesser degree silver. And so even though here we are, the Dow is like coming up at 45,000 and we're at lifetime highs, stocks actually are vastly lower than they were in 2000 in real money terms. I know how bizarre that sounds, but this is the case. Next ratio chart. This is the Dow Jones Composite divided by silver. I want to show you this isn't just about silver or gold. It can be about either. Here we have the Russell 2000 divided by gold. And here, unlike this rounded top, you've got more of a diamond pattern. But in each case, we have a breakdown. So in terms of the you are here kind of moment, so here we are emerging out of that egg, something equivalent to here, which is around the autumn of 2007. Well, think about what was about to happen to stocks around about then. And then here is the small caps, Russell 2000 divided by silver. Kind of a mix here. Here's a beautiful rounded top followed by a hard tumble. And here is this diamond pattern. I'm just being a lazy bum by making an oval. It's a lot quicker, but it is a diamond pattern, and that looks like it's about to break down below that. One last example, which is a bit of an upside down version of what we were just looking at. This is gold divided by the spider. And the idea here is that, is this a bullish looking chart? And I contend that it is. To me, it looks like that this has had years and years and years of falling, and now it is stabilized. And importantly, we have a higher low taking place here. So this is beginning to, via inflection point, turn higher. The supposition here, the conclusion I draw, is that gold relative to stocks is going to have a good ascent and be the reverse of what we've been seeing for so many years before. This bizarre thing, they call it the Consumer Price Index, but what it is purchasing power. This goes back forever, U.S. history. It goes way, way, way back to when the Federal Reserve was first born, so over 100 years ago. And this shows the purchasing power of the dollar, which for a while during the deflationary period of the 20s and 30s, dollars actually were more valuable and they gained purchasing power. That was the exception. Since then, it's just been a wipeout. Dollars are worth less and less and less. So you see like the old menus, like steak dinner, 25 cents. Wow, what a bargain. Well, not really, because maybe you made $10 a week back then. So it's all relative. So purchasing power has been demolished. Let's use the reciprocal of that. This is flipped upside down. This is 1 over the same symbol. And let's go further and let's take gold and divide it by the inverse of purchasing power. That's very convoluted, but what this illustrates is, what is gold's purchasing power in the economy? How much bang for the buck do you get out of gold? And so as you can see, we climbed steadily for a while, and very much like the price of the gold chart in general, you can see here we're carving out this beautiful cup, this beautiful rounded base, which I believe will be conquered, so to speak. We'll get above that base and it'll start a new powerful ascent, because if this were a stock chart, this is the exact kind of stock that you would either want to buy or be ready to buy if it broke above the pattern. Here's silver. Going back farther, same idea. We had a nice base here, and the beauty of this one is that the history goes back way farther, so we can see a prior example of what happened after a base. So we had this nice base created, burst above it, retraced perfectly, and then blasted higher. And now we're doing the same thing again. So perhaps some patience is called for. Perhaps you should wait for the breakout above the pattern, but so far so good, definitely. And of course, the instruments to trade, gold and silver directly, and these are augmented with my drawn objects here. GLD for gold, which is right near lifetime highs right now, and SLV for silver. Now, yes, you can buy physical gold, physical silver, or you can get these ETFs. You can trade futures on them. Let's spend just a moment on the miners themselves. The gold bugs index is like so, the HUI. Not a particularly compelling chart, but what I went through dozens and dozens and dozens of individual miners. And here are 5 real quick. We're not going to talk about them at all. Real quick that I just thought were kind of cool. Symbol DRD. This is DRD Gold. Symbol EGO, EGO, Eldorado Gold, one of the better known ones. EQX, Equinox, coming out of a nice base there. SKE, Skeena Resources, very pretty. And one last one, Wheaton Precious Metals, WPM. And as a chart, this one's my favorite. A couple more ratio charts just to drive the point home. This is silver divided by UUP, the US dollar index. Same idea. It's coming out of a base. It has been strong against the dollar in general, but I believe it's going to accelerate away from that base. Gold, GC, it's already broken out. It's already gotten above the base. So in terms of the you are here kind of moment, it's sort of this idea that we have emerged from the base, and I believe we're preparing for an ascent. Just to get toward the conclusion here, we're doing okay. We're going to make it. I felt this was one of the most important points of all. Silver divided by gold. What is the silver to gold ratio? Because they tend to follow each other more or less. If you knew for a fact gold was going to be up 20% over the next year, silver's probably going to have a really good year too. They don't have totally minds of their own. They're going to tend to track each other. But the ratio between the two does change quite a lot over time. For example, back here, silver in 2011 was exceptionally valuable compared to gold. And that ratio collapsed completely. Over the long haul, right now, silver is relatively inexpensive compared to gold. So keep that in mind. And therefore, here's my conclusion. I think both silver and gold have a bright future ahead. I'm more partial to silver because I think that the chart basically hasn't gotten away from us yet. Gold's gone really far, really fast. Silver seems to be revving up for the big move. This goes back decades. My belief is that this cup with handle pattern here has set into motion a push that will get us ultimately above even the highs we saw back here. The instrument that I'm drawn to is a little lesser known, but it's this critter here, PSLV, the Sprott Physical Silver Trust, which itself, you can see a very nice looking pattern here, and whose target I would lay down